Okay, hi, hello, good morning, good afternoon to all of you. This is session number, Aditya, session number is 36 of AMA. Going forward, we will be doing a mix of these AMA sessions, I think on alternate weeks. For some weeks, on alternate weeks, I will be coming directly live like this today without a guest, and then we will answer all the queries of the candidates. And then alternate weeks, or depending on whenever we find a good speaker, we'll invite them and then we'll do queries jointly, right? So that's roughly the format. I hope all of you doing good. If you're on YouTube and listening, I can see some people posting. Why don't you give me a hi, hello? I can see Yujan, Khush, Shyam, Prathamesh on YouTube at the moment. Good morning to all of you. What's the agenda today? We'll spend about 5 minutes on talking about CFA results, which were announced yesterday. Another 4 or 5 minutes we'll talk a little bit on what's happening in the US. I think we should talk. It's interesting to say the least. So we'll have some discussion on US, and then I will start with questions, right? So whatever queries, questions you have, I'll try and answer them. So let's start with CFA results. First, congratulations to all the candidates who passed the Feb 25 exams. Great achievement. Once you're done with level 1, good chance someday you'll become a CFA charter holder. Keep at it, keep on working hard. Level 2, level 3 is a lot of fun. But my larger message today is for candidates who did not pass. Okay, so when we say that 45% was the passing rate, it means 55% of the candidates who took the exam for whatever reason could not pass, right? I heard someone reached out to me on Instagram, and that person said someone she knew was under a lot of distress because that student could not pass level 2 for the second time, and family was worried that maybe student might harm herself or something on those lines. So this is what I want to talk, that at times I feel like we give too much importance to things that do not matter, right? I mean, of course, CFA matters. All of us work really, really hard to prepare for the exam, but does not mean not being able to pass the exam is the end of the world. Okay, and I have a very simple statistic for you to look at. Okay, on an average for each level, the passing rate is in the range of 40 to 50%, right? If I take all the historical data, that's roughly what you're looking at. So if I throw a simple question at you, that imagine a candidate is going to take 3 sequential exams, level 1, level 2, level 3, and probability of passing each exam is about 40%. What is the probability that a candidate will pass all the 3 exams in the first attempt? Right? All the CFA level 1 quant, all the CFA candidates, especially the ones who've studied quant, answer this question. If the probability of passing per attempt is 40%, what is the probability that you would pass CFA level 1 and 2 and 3 in the first attempt? Tell me, how much will it be? So when I say and, it means we multiply, right? So 40% into 40%, that's 16%. है ना? 16% into 40% कितना होगा? Roughly about 6.4ish. Please correct me if I'm making a mistake here. Yes. Right? Roughly about 6.4%. What does it mean? It means very broadly, out of all the CFA charter holders that we have in the world today, roughly about 6 to 7% are the charter holders who have passed in the first attempt. Otherwise, there are remaining 95, 92, 93% of the charter holders have failed once or maybe more in their journey. right? So just because you take level 1 and for some reason you do not pass does not mean it's the end of the world, right? And it does not tell you that you are not smart enough. See, these exams are small sample of the total population. So कोई छोटी मोटी एग्जाम को लेके you takes a small exam and it you allow that exam to tell you that you're not smart. I don't buy into that theory, right? So my message to that particular student, your parents are worried because how you're responding to it, and it's not worth it, right? So don't do this to yourself, don't do this to your parents. We are all much more capable. Just sit back, reflect on what could have gone wrong, and then build a better strategy and just keep on working at it. You will be a CFA charter holder someday. All right, so that's the message. Second, I think a lot of discussion on this new CFA result system, right, where they started giving you minimum passing score. I think that was about 1600, and people are asking what changed. So honestly, nothing changed. It's a scaled score. So earlier we used to read with that graph, and I used to say that, hey, passing line was here, mera usse thoda upar tha, right? So when we used to say that I was a little above the passing line or little below the passing line, there was no way to quantify that. You would say that half centimeter, 1 centimeter, there is no way to measure it. Now you just have a numerical score assigned to it. Apart from that, it does not tell you anything else, right? So when CFA Institute says minimum passing score is what, 1600 now, does it mean it's 70%, 80%? No one knows. They're not disclosing it. Whatever was there earlier in that graph, now just converted to a numerical score, right? So, I mean, one extra data point to work with, but nothing significant. No one knows what minimum passing scores are. A lot of people come and ask me, same for level 1, level 2, level 3, that if I score 65%, will I pass? If I score 70%, will I pass? No one knows that, right? My guess is, and it's a guess, that somewhere around 70%, 72% is a reasonable MPS. So which means if you target accuracy of 75-80%, you have a good chance to pass. Usi level pe ab preparation karna, and it's doable. These are not tough exams. They do not tell you if you do not pass doesn't mean you're not smart. It just means you're not well prepared. अच्छे से prepare करो, results आएंगे. Have a good strategy, and do not let any result ever in your life tell you that you're not smart. It's really, really not worth it. Okay, so that's 2 cents on the CFA results. Then a lot of CFA level 1 candidates are coming and asking, okay, I passed now in Feb. What should I do? Should I take my level 2 in August? Should I take my level 2 in November? Or should I take my level 2 in May next year? Right? That's another common question that I'm getting. So I have a very simple thought process on this. August for me personally is a complete no-no. I think it's too short of a time to prepare comfortably for level 2. So really your decision making metrics is between writing November this year 2025 or writing May 2026. Now I have raised this question with CFA Institute also, in fact in one of the recent meetings, that can we not have a Feb attempt for level 2, because that would be ideal for candidates, and since it's an online exam, I don't see any harm or logistical difficulty to conduct level 2. I mean, I don't know, but I'm sure it would not be as difficult. But of course, we don't know if that's going to happen. Ideally, a Feb next year attempt would have been ideal. But let's say if you have to make a choice between November this year or May next year, how do you choose between that? So if you're a full-time working professional, other family commitments, and you have about 2 hours to study, and you truly want to enjoy the syllabus, I would still be inclined to take May 26. And I know it's a very, very long period. It's almost 1.2 years. So again, the moment I say May 26, people come and tell me, then I will not stay motivated, right? I mean, itna kaun padhai karta hai? To which my response always is, you have to be willing to learn not only for CFA level 1 or 2. आपको पूरी जिंदगी भर पढ़ना है if you want to work in this industry, right? So just because you don't have an exam, you will not study, basically equals to you will not study after you become a CFA charter holder and you would be redundant. Okay, so very simple. If you're working, you have other responsibilities to take care of. I would give myself a lot of time and rather enjoy the syllabus rather than rushing through it. Okay, but if you're a full-time student and for some reason you cannot have a job, maybe because you have not completed your graduation or whatever reason, then I think November is a good attempt, because then you can invest more number of hours and still enjoy the syllabus. Okay, so that's 2 cents on which attempt to choose. I would not recommend August attempt to candidates who've recently finished level 1 exam in Feb. I think the time is just not adequate. You might still pass the exam to nikal jayega, but you would still not be able to enjoy the syllabus. Okay, so that's on the CFA exams. Ab mazedar topic on tariff, because Mr. Donald Trump is making our life definitely interesting, if not anything else. I have been tracking markets very carefully, in fact, probably sleepless nights, because I was waiting for the speech first day. It was 1:32 in the night, I guess. See, in general, what's my view on reciprocal tariff is what people are asking, right? So there are few, I will give you a few points on how I'm approaching this. First is the point of uncertainty, which is not knowing what's going to happen. Now, are we at the peak of uncertainty, or are we at the bottom of uncertainty? Is more uncertainty to come? So my belief is that the way Donald Trump negotiates, right, and this clearly looks like a negotiation tactic. It looks like probably the first blow is done, and after that the negotiation most probably will work in the positive direction rather than negative. Now, specifically for Indian context, right? So we got the blow of that 24 or 26%, whatever is the number. Hopefully there would be some negotiation over a period of time, and hopefully with free trade agreement or whatever in 6 months, 9 months, maybe there would be some rationalization there, right? So in my perception, we are closer to the peak of uncertainty, and after this maybe more visibility will start coming as far as the tariff is concerned. However, having said that, now what happens of this tariff implication on global economy, right? So again, Surya is asking if I'm expecting recession. Let me answer that. In CFA curriculum, we learned that your GDP is made of 4 components, right? All the CFA students, can you tell me what those 4 components are? A plus B plus C plus D, right? What is that? Can anyone tell me? That's right. C plus I plus G plus X minus M, right? Which is private consumption or consumption, investments, government spending, and X minus M. Okay. Now let's think of each of these components and let's think of what could be the potential impact. Okay. So let's think of consumption and let's think of US economy now. So earlier you would probably get a cup like this, let's say for maybe $2, right? Manufactured in China, imported to US. Now suddenly you start charging 30, 40, 50% tariff on that, right? So the cost of this cup from $2 will probably go to $3, $3.50. So which clearly means there would be a inflationary pressure and therefore to some extent higher prices of the product will result into some normalization on consumption, right? So you're expecting the consumptions to slow down a little bit. Also, basic economic theory tells us that my consumption today, which we call in economics a fancy term, marginal propensity to consume. So your consumption today is a function of what is my income today, but also how certain I am about my expectation of income tomorrow in the future. Now, with so much of volatility, people will keep their discretionary consumptions on hold. Imagine if someone is worried about losing job, right? Will they commit to buying a new car or a new house? They will say, you know what, let's wait a little bit. So there would definitely be some negative impact on the C part, which is consumption. Then we come to the I part, which is private investment. What do you think happens now? So imagine you're an entrepreneur sitting and thinking that एक फैक्ट्री लगाता है ताकि फिर यूएस में एक्सपोर्ट करेंगे, right? Or you're an US entrepreneur wanting to set up a factory to take benefit of tariff. But then you don't know if the tariffs will stick. So uncertainty is on both the side. So what do you think is a very natural reaction for people to do? A very natural reaction is to defer the investments, right? So capex cycle will definitely slow down at least for 3 months, 6 months. Everyone will look for better clarity. So C will go down. There's a good chance I will also go down. Okay, so investments going down. Now let's think of the third part, which is government expenditure, right? So now every time Donald Trump is making a speech, he says that I'm going to charge China tariff, right? Now think about what a tariff is. It's nothing but a import duty. Who really pays for the tariff? So imagine I'm importing a fancy car in India, and the car was manufactured for 20, but I paid 40 in India because 20 was the tax to be paid. So who pays for the tariff? Is it the China who's going to pay for the tariff, or is it going to be the US businesses and consumers? It is US businesses and consumers, right? So अब क्या होगा? The government will collect that tariff, right? So government's fiscal deficit might reduce a little bit. Their fiscal expenditure might reduce a little bit, which basically means a policy like this is going to be contractionary in nature, fiscal contractionary, because all the tariff increases the government revenue, but there's no proportionate increase in government expenditure at the moment. So government expenditure could be a negative impact. And of course, exports and imports would be affected the worst, right? China kind of did retaliatory tariff as well. So overall, and I'm particularly worried about the I part here, right? I mean, this capex part has the ability to reduce world GDP by at least 70 bips to a 1%. So I feel there is a very high probability that it will definitely have negative impact on GDP. There is a reasonable probability that we will enter recession as well, right? So you want to be careful on those parameters. That's my perception on this. So from investment perspective, how am I approaching this? One, I think I increase my allocation to gold a little bit more. So gold now, I think to my total portfolio should be about 6 or 7%. Historically, I think last few years it was about 2%. So I bought a little bit of extra gold. Reason for purchasing gold is very simple. It's in a long run structural trend. But more importantly, if that dollar starts weakening, or if US kind of loses its strategic importance in the world power, a very natural response of a lot of central banks would be to start allocating some money out of US treasuries and move back to gold. So that will increase demand for the gold. So from that perspective, I think some allocation to gold, for me personally, looks okay. So that's why I've bought gold. There is a chance that we might see a near-term correction, but I think a 3-year, 5-year view, it looks like a okay investment right now. Equities, I made one purchase decision. I bought one, allocated little bit of money to pharma on the first day when the tariff was announced, when the pharma was exempted, and then the next day when the Donald Trump came and made that thing that will have taxes on pharma, which we've never seen before, or he made some comment like that, and then pharma stocks tank, right? So I have decided not to act immediately, because in markets like these you have that urge that kuch kar leta hu, kuch karta hu. So now I'm going to wait and watch, observe things carefully. However, my underlying principle that the point of maximum uncertainty is also the point of maximum return, right? So जिसको हम लोग हिंदी में कहते हैं कि जब खरीदते वक्त बहुत डर लगता है अंदर से, that is probably also the time when you end up making reasonable amount of money, though you have to be very, very careful with what you're buying. Believe it or not, despite this correction, the small cap, mid cap space is still looking expensive. I mean, I'm seeing companies with growth prospects of 10, 15, 20% trading at, despite correction, trading at multiples of 60, 70. So I would be very careful of what I'm buying. This is not a time to go and buy random things on the street. In fact, now I think a time is to wait for some time. Just that's what I would do. Wait a little bit, just observe market and then take tactical calls. Right. So that's my 2 cents on how I'm perceiving this situation. All right. Now I think I'm ready for questions. I will start taking questions on YouTube comments or YouTube chat box. So if you have any questions, you can start posting them here. Pranav is asking what stocks in pharma. I will tell you what I like, not a recommendation. I'm not an expert. In fact, I've discussed multiple times that I don't understand pharma that well, right? So in the past cycle, what mistake I did is I allocated all my pharma money to one stock. And then I realized that I don't understand pharma, neither do I have willingness to learn, because it's a really, really complex word. So instead, the way I'm going to approach pharma in the future is diversify across 2 or 3 stories that you understand reasonably well, and then look at that basket as one particular basket, right? So within pharma, the space that I really like is the CDMO, CRAMS or contract research. Now, contingent on what happens with the tariff, right? Because now there's a lot of uncertainty. And the stocks that I've liked basically is not a recommendation. In fact, most probably these stocks will correct significantly, so do not buy, but just something for you to research on. I've been sitting on Laurus Labs for quite some time. I like Dr. Reddy's, even though some part of the business, will be discontinued in the future. Plenty of expected launches, plus the consumer business might end up doing reasonably well. And consumer business deserves a better valuation than pharma business. So that way it looks fairly attractive at current valuation. I also bought more of a tracking position in a story called Indegene. I don't know if I'm pronouncing the name right, but it's basically a tech company operating in pharma space. So again, don't buy, and I'm probably not as well researched as I need to be, but something for you to research further, right? So you can work on it. Let's take some more question. Now this question is from Stock Flow Knowledge. Hello Utkarsh, we believe in the modern age. Investors do not have information edge like they used to have 2 decades ago. Is it true? I think I concur with that opinion. So markets, we say आपके पास 3 तरीके के advantage हो सकते हैं, right? You have 3 types of advantage. One is you have access to superior information. Second, you have superior analysis skills, so information, analysis. And third, that you have superior behavioral skills. Okay, now what we say is back in 80s and 90s, where getting annual report itself was so difficult. If you had access to annual report, you knew about the company, उसमें पैसा बन जाता था, right? So that was your information advantage. Then came the internet and the PDF files, and now annual reports are all online. All the information is available. So there was a time when you could have an analytical advantage where you have superior ability to understand what's happening in the business. Now with so many investors, so many tools, I don't think there is a significant information advantage or analytical advantage. Now what we have is mostly behavioral advantage, right? So is that advantage going to remain after AI? I think 100% yes, because we have so much of AI already today, right? If let's assume that if AI was to figure out the markets wouldn't have gone into bubble territory in the first place, because then, if AI was so smart, they would have said, it just doesn't make sense, right? I mean, why should I buy a company growing at 20-30% at a PE of 150? Just makes absolutely no sense. So behavioral advantage will always remain. Human greed and human fear is a permanent emotion, right? And I don't think that's going anywhere. So those investors who have a better behavioral advantage will end up outperforming. And आपने शायद ये टर्म सुना होगा, मार्केट में कहते हैं स्मार्ट मनी वर्सेस डम मनी, and then they say that, hey, institutions money is the smart money and retail money is the dumb money. Again, I don't buy into that concept. Okay, saying that institutions are smart and retail is dumb, again, to me doesn't make sense. Institutions at the end of the day are also humans, right? And they are affected by the same emotions that you and I do. And even institutions do blunder. That's why so many hedge funds go bankrupt, so many investors go bankrupt. So what you need is a significant behavioral age, ability to control that FOMO emotion, and ability to control that fear emotion. As long as you're there, I think you would end up doing okay in the markets. All right, let's do some more questions. Jatin is asking, cleared CFA level 2, unable to get an entry level job, please guide. All right, Jatin, that's congratulations for passing level 2, and sorry to know that you're struggling to get a job. See, in finance, getting your first break is always a very, very difficult thing to do. Okay, it's not easy to find the first opportunity, especially a good quality opportunity. So which basically means it's going to be extra efforts on your part to generate those opportunities. I'll give you some pointers on what you can do. I've spoken about this in the past, but I'll do it again, and I will also show it to you. So the logic is very simple, right? Imagine if I'm going to do cold emails, okay, then the probability that someone would read my email and maybe give me a call for an interview is, let's say, 1% or lower. Okay, so if I'm going to reach out 100 people, maybe 1% out of that will read my email and give me a call. So if you need one call in the interview, then what you need to apply to 100 places. Let's say now your conversion level is 10%. So if you get 10 calls, you convert one interview. So if you want 10 calls, all that you need to do is you need to apply to 1,000 places and hope that this law of probability works out. Okay. Now, how would you apply to 1,000 different places to generate your opportunity? There are some very easy ways to do that today. Okay, and I'm giving this a very India-specific answer, but let this help everyone who's looking for opportunity. The first resource that I really, really like is the SEBI list of all the AIF and the PMSs. Okay, now how to search for that? So if my screen is visible to you, all right, so let's say search for SEBI AIF database or something like that. Okay, and it will bring you to a page like this. Okay, now you can see on this page what they have is they have list of all the registered alternative investment funds, and not only that, you will have detailed information on each one of them. So let me pick up one of them randomly. Let us say we have 3F Ventures. Okay. Now 3F Ventures registration number, address, so it looks like a Mumbai fund. Now what I'll do is I'll take the name 3F Ventures, again go on the internet and search on who these guys are. Right, so this is 3F Ventures, and here I found their LinkedIn page, and then I go LinkedIn page, and then I'll see, you know, if I have common connections, what these guys are doing, who's the founder, go and find their website, and then start approaching. So first, SEBI, AIF, PMS, reach out to all these guys. How would you reach out? Approach on multi-platforms, right? So email, then if you find the founder or the promoter on X, reach out there. If you find them on LinkedIn, reach out there, interact with them, be persistent, follow up, right? That's list number one. Second thing, find out list of all the asset management companies in India, right? We have about 200, 300 of them. Apply to all of them. So again, like asset management company could be, let's say, HDFC Mutual Fund. Now within mutual fund, they will have equities, they will have debt. Apply to all of them. All of these guys are available on LinkedIn, Twitter, reach out to them. Third, AMFI has a website, especially for those of you who are looking at private wealth type of opportunity. AMFI has a website where you can find a list of corporate ARN. Okay, especially in your city. For example, let me do that here. Let us say AMFI list of ARN holders. ARN is some number that all the distributors have. Okay, so I will select, let's say, Pune here, and pin code, I don't know, 4000. I'm picking up a random one, let's say 5, and let's say corporate, and go, and here you go. Now I found list of all the mutual fund distributors who hold a corporate ARN. Now corporate are supposed to be slightly larger in size. Now I have list of 5, 6 of them. Let me pick up this one, copy and put this on internet and see if I can come across their website. Right, so here I found the founder of this, his name is Sachin Chauhan, and then he's a director, and then I'll reach out to him, you know, try to generate some opportunity. So this is your alternate list of corporate ARN. Now, if you want to work directly in Indian markets, I think this list is reasonably good. You should be able to find 1,000 opportunities to apply. You will definitely convert one. On top of it, you can take benefit of your typical portals, right? So portals would be your Naukri, Monster. I don't need to tell you those ones, right? Naukri, Monster. So apply through all of them. You can take help of people like us. So we run placements quite aggressively. This month, I think last month we had 2 big wins. We did one placement of level 2 candidate for about 18 lakhs, and I think yesterday we did one more for about 20 lakhs. For us, that's a big number because our average placement size historically has been about 4 to 5 lakhs for level 1 candidates. So I think the pays are getting better, at least in some profiles. This month we are also launching Dubai. So we would be trying, if we can, place Indian candidates at least on entry-level roles in the Middle Eastern market. So if you have access to FinTree placements, you know, take benefit of that, and then leverage on your natural network. Natural network is आपके uncle, you know, uncle's friend. Just look at people like these who can refer you. From there also you can generate some opportunities. Right. So hopefully that answers your query. Let me take the next question. Jatin is saying, on the website, the email are of compliance people instead of HR people. Yes, Jatin, you're right. On the SEBI website, the emails would be of compliance guys, but it will give you, it will direct you. You can always search for the website of the you can always search for the website of the company, and then apply, then find out who are the promoters and then apply through them. All right, let's take some more questions. I'll take one from the previous comments. Twinkle Khanna is asking, what's the difference between valuation and equity research? How can level 1 students enter and switch between the roles? See, valuation is a fairly large term, because in India we do valuation of variety of different things. So we know that India is an outsourcing market, right? And a lot of valuation, complex valuation assignments end up coming to India from across the world. For example, let's say you might see a valuation role for, let us say, goodwill, right? So every time you do impairment testing on goodwill, you need to figure out what the valuation of goodwill is. Now, which is complex, which will require skilled manpower like CFAs. In the US, it will be expensive. Outsourced to Ernst & Young in India, they'll do it at 1/10 of the price, right? So there are plenty of profiles in India on complex valuations, goodwill valuations. Let's say I have to do valuation on swaps. Again, that work is happening in Ernst & Young and your KPMGs and PwCs of the world. Let's say I want to do a valuation for a startup, for an investment, for a VC fund, for their mark-to-market calculations. Or I have to do valuations of some equity or listed stock. So that's what valuation means. Now, within that, if you're doing valuations for a listed company with an intention of writing buy or sell report or buying or selling, that becomes your equity research. Can you switch between the roles? I think you can in the early days in your career, but as you progress, it becomes difficult. I don't think you can move from valuations to equity research role after 10 years of experience in valuations. I think you figure out what you want and then stick to it. It will be difficult to switch them in the future. Okay, all right. I will be happy to take questions on the YouTube. Feel free to ask. Why don't we talk more about Chinese economic philosophy and thinkers when China is clearly emerged as a major global force right next to the US? Yeah, that's good. That's a great question. Let's ask by Aditya. So, see, the philosophy of my knowledge of China is based on whatever little I've read, right? So I don't understand beyond that. I haven't interacted or done any business with Chinese in the past. But the philosophy is very simple. Everything is government run, right? And when it's government run, your focus is not on, like in India, if I were to do a business, I will make sure that my ROE is at least 15 to 20% to cover my cost of capital. In China, it will be okay for a large business to have a ROE of 6% as long as they're doing it at a scale, right? So there is not a lot of focus on return metrics for large businesses. Why? Because the government wants to dominate scale. And they're able to do that purely because of economies of scale and reasonably skilled manpower, right? The technical skill of China is substantially better than rest of the world. Now, that model worked perfectly well for China because they had that manufacturing advantage. They had the population to support it. India, because of our economic philosophy and political philosophy, that model will not work well. For example, in India, we will not be happy, government will not be happy for businesses generating an ROE of 5%, right? You would want a business of ROE of 20%. So imagine there is a business where I need to manufacture at scale, will not make a lot of money, but let me achieve world dominance. Indians might not do it, but a Chinese will do it, right? And that's the main thought process between the two businesses. But clearly, I think credit where it's due. They've done, क्या होता है ना कि डिक्टेटरशिप का भी इकोनॉमिक पर्सपेक्टिव से, इफ यू रीड इकोनॉमिक थियोरी, इनफैक्ट इट सेज dictatorship regimes are better than democratic regimes. Now, I'm not saying China is dictatorship, but it's almost like that, right? The political party has a lot of clout. That creates stability in the policies. Now, I read somewhere that it's become mandatory for Chinese school kids to learn about AI from 6th grade onwards. We can't do that in India, right? So a lot of tough decisions taken that way definitely helps. All right. TSM is asking, I cleared level 1. I'm working in AIF consulting, handling SEBI registration, regulatory reports. Does this work have a lot of scope in the future? 100% yes. The regulatory compliance will keep on getting more and more complex. TSM, there will be a need for people who understand compliances well and understand finance well. I have one student in Bangalore who recently asked me the same question. I told him the same answer, that you are sitting on a gold mine. Do not leave. Keep on doing what you're doing. Especially handle all the compliance part well. There's a lot of opportunity in this in the future. All right. Akash is asking, can I take FRM L1 in November and CFA level 2 in May? It's a good strategy. It's doable, Akash. Definitely doable. Prathamesh is asking, in the class you talked about economic data point where it will grow relative on a high growth when it hits a 5 trillion mark. Something on those lines, paraphrased, elaborate please. I was talking about per capita GDP from the current 2500 to 3000 level to about 10,000 level, right, which is where our Southeast Asian neighbors are. So हमारा जो journey होगा, this journey basically strengthens middle class, right? So imagine what I was trying to say is, imagine you're making money just enough to survive. Where will you spend? You will spend on housing and food. But you start making a little more money, then you would consider watching a movie, right? Or then you would consider going out. You make a little more money, you would want to have a refrigerator, you would want to have an automobile, maybe a refrigerator, maybe an air conditioner, right? So right now, India is such underpenetrated country for all this discretionary white goods that when our per capita GDP starts rising over a period of next 4, 5, 7 years, which will happen by the way, the space will change, but we will reach there. Automatically, this very powerful, middle income population of the country will start spending, and we already see early signs of it. And when that happens, all these consumption category of stories will work out really, really well. The growth rate will be fastest, especially from a stock market perspective. So maybe that's the conversation you're referring to, Prathamesh. I'm tired. I'll probably take 2, 3 last questions. Jatin, you're spamming the chat box, my friend. How is investor relationship as a career? It's a good career. It's a good starting point, not necessarily a good ending point, but definitely a good place to start. I heard somewhere that fair value of the market is 18 to 19,000. What is your opinion on that? No one knows. See, right now I don't know what's the P ratio of Nifty right now. Let's check. Check करके बताओ कितना है P ratio on Nifty. So let's say we are about 2021 now, maybe a little lower. Let's assume that we have a 20.8, right? So about 21. Let's assume we have a historical median P of Nifty is somewhere in the same range, 18-19 के आसपास है. Even if we have 10% correction on current level, we don't reach to 18,000-19,000. So I don't buy into that theory. See, ये market में आपको हमेशा ऐसे डेढ़ शाने मिलेंगे टीवी पे भी कि जब वो market, when the markets are falling, they'll come and give you extreme negative commentary. Right? When the markets are going up, they'll come and give you extreme positive commentary. You don't want to be swayed by the either side, right? Just I don't see a reason why Nifty should go back to 17, 18,000. Just makes absolutely no sense to me. And if it goes there, then probably would be a time for us to sell our houses and buy stocks. Mishal, what if we are planning to go to equity research? Should we apply for job after level 2? What additional skill? Mishal, सिर्फ financial modeling अच्छे से सीख लो और कुछ नहीं चाहिए. In my team, I have an intern who came to me and he said, sir, I don't like financial modeling. So maybe equity is not for me. And my response to him was that if you do not like financial modeling, that means you do not like analyzing businesses. And if you do not like analyzing businesses, about 80 to 90% of the finance roles are not for you. Because you work in equity research. What is financial modeling, right? You take a business, the business has a story, you put that into a numbers, come to a valuation. That's it. That's what modeling is. Equity research will require you to understand business. But forget equity research. Investment banking, understand business. Venture capital, understand your company. Private equity, understand your company. M&A deal, buy side, sell side, understand what company you're dealing with, what's the synergy. Finance, you're a lender, you work in a bank, you want to give a loan, understand what the business is doing. You're a credit rating agency, understand what the business is doing. So business नहीं समझ में आता है तो आपको finance में वैसे भी career नहीं है. Right? And if you're good at business, you automatically will get good at financial modeling because it's just a skill to convert your views on the business into numbers. So think of it that way. Do you teach level 2? When is the May 26 batch starting? Yes, I do teach level 2 batch starting. I think just reach out to FinTree team, they'll help you with it. Last 2 questions, guys. I'm tired. Google OK is asking, can we do CFA, CA both? Yes, you can. I did. Though you're making, by doing that, 3-4 साल आपका जिंदगी पूरा खराब हो जाएगा. But if you enjoy that kind of study, sure, why not? What is your view on Warren Buffett sitting on 325 billion worth of cash? Great. I think he's fantastic investor. He's probably proved time and again that he can enter the market and exit the market at the right time. Unfortunately, I do not have that skill. So I try to remain invested in the markets throughout rather than timing the market. Though it's become very difficult to find areas where money can be deployed, right? Because a lot of uncertainty in the current market environment. Last question. CFP or FRM, which is better? Depends on what you want to do. If you want to get into private wealth, CFP is okay. CFA is not bad, but I would rather prefer CFA. If you want to work in risk management, FRM. If you just have to choose one out of the 2 from a job perspective, FRM is always better. Alright guys, I'm kind of exhausted. I hope you enjoyed this session. I think after a long time we did not have a guest. It was just one-on-one. Why don't you let me know in the comments if you would want more sessions like these where I'm answering your queries, or you would want to see more sessions where we have a guest and we have conversation on some part of finance. So depending on your feedback, then maybe है ना हम लोग ऐसे plan कर सकते हैं. So depending on the feedback that we get, then we can plan how to keep sessions in the future. So once again, thank you very much. There are many queries I could not answer today. Aditya, I'll probably post a separate video on that now. I'm kind of exhausted. There are many questions I couldn't answer today. Please post them in the comment of this video. And I will either kind of do smaller videos on them during the week. This week I'm recording some content for social media. or if not, then I'll try and deal with them in the subsequent week's class. All right. So with this, thank you very much. Appreciate your valuable time and hope to see you again same time next week.